I think that what you're going to see is that if there's 180 countries or something out there, I think that 15 or 20 of them keep their currency privileges. I think the bottom 100 are going to lose their currencies. I think they're going to dollarize first. Everybody wants to, but how do I dollarize? The best way to dollarize is the El Salvador strategy, which is I have a mobile application which has got dollars and it's got Bitcoin on the Lightning Network. What you want is you want a currency as a medium of exchange. It's like a stable value coin, stable versus all of the pricing of the retailers. And that's like a dollar. It's probably the most stable thing in the universe. And then you want an asset, which is an appreciating token that will hold its value over time. And that's Bitcoin. And if you wanted to maximize your utility, you kind of put 90% of your balance sheet into the asset, into Bitcoin. And then you put the last piece, the working capital or the checking account, into whatever's the currency that most of the retailers that you're surrounded with take. So if I was in Japan, I'd be holding 1 month worth of yen. And if I was in Italy, I'd be holding 1 month worth of euro. And if I'm in the US or a dollar economy, I'm holding 1 month worth of dollars. And then the rest I'm sweeping into my long-term asset portfolio or property portfolio. And my stock of property is, maybe I buy a property to live in because it's a nice house and I want to live in it for the rest of my life and I can't rent it. Maybe. Then maybe I buy my trophy art, or, maybe I buy the picture because I love the picture, or maybe I buy the car, or maybe I buy the boat, or maybe I buy the plane or something because I want to fly in it, float in it, live in it, whatever I want to do. But all my discretionary asset, I would put into the highest quality property, which is of course Bitcoin. So generally, I think what you're going to see is, $100 trillion worth of capital flow out of investment properties in the developed world into Bitcoin, and the currencies, the euro, the dollar will get stronger. Like that. By stronger, I don't mean stronger in purchasing power. I mean, you'll probably see the dollar become a currency used in El Salvador, and you'll see it used in Venezuela, and you'll see it spread to Argentina. And why wouldn't you see it spread to every country in Africa? Like, name a currency in Africa that you would prefer to hold in your wallet versus the dollar. Like, none, I think, right? Is there a better currency than the dollar in Africa? But if I have $10,000, I'm probably going to hold $50 in my currency wallet. I'm going to convert the other 9,950 into Bitcoin, because that's my checking account versus savings account. And even then, the best thing, I think, the ideal situation you want to get to eventually is I put 100% of my assets into Bitcoin. And then I have a credit card / credit line, which is drawn against which is converted into local currency, and it is drawn against the Bitcoin. So I have $10,000 of Bitcoin and I want to spend $37. So I spend $37 and now I owe $37 against my my 50 million Satoshis. And I never really sell my Bitcoin. I just generated debt against the Bitcoin. And we're a little bit early here, but if your expense ratio is less than your expected appreciation over time, that is to say, if you expect Bitcoin to go up 10% a year, and if you have $1 million in assets and your expenses a year are 50,000. So your expense ratio is 5% a year, and you expect Bitcoin to appreciate at 10% a year. If your expense ratio is less than your expected appreciation over time, you never have to sell anything ever. You can borrow against your assets from now to the end of eternity. Now, it requires that you have a Bitcoin banking sector developed, right? You have to have a credit line against the Bitcoin, and we see that developing in different ways around the world. But ultimately, that would be the ideal situation. You would want to have a situation where you're holding Bitcoin and you're drawing credit lines in the currencies that exist. And I think what we'll see is the world will reduce down to 10 currencies or 5, the Chinese currency, the US dollar, the euro, right? The only way currency can exist is for the government to stay viable. And, there's no Afghan currency right now, right? I mean, it's not going to be one of those. So if you're spending anything, what are you going to be spending, right? It'll probably dollarize. If it isn't, it's already dollarized, right? So I think that what we see is a collapse of currencies to a few. And I think you see the collapse of properties to a few, right? Like, for example, there's 100,000 buildings in the US you can buy for the cost of 1 Bitcoin, or you can buy Bitcoin. Which of the two is the easier decision? So presumably it's like a lot of things that are manufactured as stores of value, a security, a REIT, a bond. It's like, why do I need all that stuff if I can just buy Bitcoin? So I think that, how will it develop? It'll develop at different rates organically in different countries, in different markets, based upon the culture, based upon the law, based upon the circumstances of the people, and based on crises, and based on common sense, right? You're in Argentina. Do you feel safe in Argentina? You have $1 million. Do you want to own $1 million worth of a company in Argentina, a ranch, a building, a gold, a boat, land? Or do you want to own the currency, or do you want to own the Bitcoin? Right? If you're thinking you're going to flee the country, everything I named is worthless except for the Bitcoin. When I had money in Argentina and I was trapped there, I was like, well, can I buy a boat with it? It's like, I either buy gold, I can't get that out of the country. I buy a yacht, I can float that out of the country. But that was before I knew about Bitcoin. So today, if you ask me the question, I'd say buy Bitcoin. It's kind of simple, but that's because I'm leaving. But on the other hand, if you're living in Texas and you like Texas, you might feel like it's okay to own 100 acres in Texas. Maybe you think you feel safe in Texas, and you have a gun, right? And you have some horses, and you have a tractor or a truck or a Jeep. You don't need to smuggle the gun, the Jeep, and the horses across the border tomorrow. So you can own that property. And you feel like, well, Texas is not going to impair the value of my land, so I guess I'm okay there. So I feel like the circumstances of the individual and common sense will dictate your property distributions. But the apex property is always Bitcoin. And in my opinion, which is pretty well known, is if you had $10 million in US dollars converted to Bitcoin, and if you wanted to buy anything, you're best not to sell the Bitcoin. You're best to borrow against the Bitcoin. As long, if the volatility of Bitcoin is going to be plus or minus 80%, then keep your loan to value at 10%. You're safe. And if you're reasonably certain the Bitcoin is going to appreciate at 20% a year, and if you can keep your expenses at 5% a year, and if the volatility is not going to cause a max drawdown of more than 80% a year or 50%, you figure out what the number is. Once you figure out those 3 calculations, you can get to the point where you decide, I'm just going to hold my assets. I'm going to let my asset appreciate. I'm going to fund my living expenses with debt. If I want to buy something, another asset that I think is an asset, I might still want to borrow against my Bitcoin to buy the other asset. If you actually sell your Bitcoin to buy an asset, that's a diversification. And you could diversify because you want to diversify. That's a personal decision. But if you've got an asset going up 130% a year, and you said to me, Mike, name something else that you think will go up 130% a year that I can diversify into. The answer is I don't have anything, right? Like if you said to me, okay, well, I got to split my money 50-50, half goes into Bitcoin. What's the other half? I don't know. I guess a portfolio of big tech stocks, maybe the NASDAQ, maybe a combination of Apple and Amazon and Facebook and Google. You buy some wickedly cool technology, maybe, or you just take a very, if you want to be very conservative, it's like, I just buy a house that I expect to live in the rest of my life because I know I'm going to get value from that because there's value to me getting up in the morning and being in my space. So that's rational. But I don't expect $1 million house to be worth $1 billion in 20 years. But there are people that put $1 million in Bitcoin and will make $1 billion off of it by holding it. And of course, it's a very simple principle, right? Which is your house in Texas isn't universally appealing to everybody with money on earth. And I can't oscillate the house in Texas 1 million times a second on an iPhone, right? So the problem is the velocity of the asset is slower and the appeal of the asset is slower. And there's a maintenance charge. The house leaks. You got to paint it. There's things you got to do to it. There's a property tax on it. So if you're looking for, a measure of energy that's easiest to develop or property you can develop on top of, then you want the most universally desirable property that's hardest to impair, that's easiest to develop, that can be utilized at the highest frequency. When I have a hotel, if the hotel had every room booked 365 days a year, I'm obviously squeezing more revenue out of the hotel. But let's do a thought experiment. What if I had 100 rooms in the hotel and every room is booked every night, 365 days a year, and you're charging by the hour? Well, that's interesting. Now, how many hours of the year, how many room hours are actually unoccupied in the hotel, even though the hotel is theoretically booked every room night? Even if 100 people book every room night in the hotel for 365 days, they have to leave the room. They leave to go to work. They leave to go out, to a bar. They leave to commute. And point of fact, the hotel that's fully booked is empty 2/3 of the time. So if I really could book out the room hour by hour, my revenues would triple. So you see where you get. Now, what if I could actually book out the room hour by hour to anybody in any city on earth? What if I could actually move the hotel or teleport the hotel every hour? Well, not only could I drive the occupancy up by a factor of 10, I could also increase the pricing. I could move the hotel to the place in the world that the Venice for the Venice Film Festival, or I can move it to wherever the Super Bowl is. So if I could move the hotel to the place where the room rates are the highest by the hour, my utilization would go up, my price per hour would go up. What if my costs were fixed? Well, now, if you think about it, right, the profitability of a hotel running at 47% occupancy at standard rates in Dallas, Texas is 10%. The profitability of the hotel running at 100% occupancy at standard rates goes to 70%. The profit of the hotel running at 300% occupancy goes to 200%. The profitability of the hotel running at 300% occupancy at the highest marginal rate you can get for a room anywhere on earth at any point in time is going to 3,000% or 30,000%. And so what did I just do? I just dematerialized the property and I moved it with a frequency which was unimaginable. That's what Bitcoin is, right? That's what happens when you dematerialize property. You have the option to move it with a frequency which is unimaginable to the highest marginal use, right? And when people get their heads around that, you realize that, well, do you want to own a hotel in Texas? No. Do you want to own anything fixed in the real world? No. What do you want to own? You want to own the apex property in cyberspace that's universally desirable to everybody. And then you want to loan it out to them for the number of seconds that they want to use it, and then snatch it back at no cost, or 1 Satoshi. And that really is what's interesting about Bitcoin and everything around it, right? I mean, all of the possibility to develop those businesses and develop those applications.
Yep.